Hey everyone, we're here at the IMN Atlanta event, and we're here at the Lima One booth with Nathan Trumpio. So Nathan, thanks for being with us and thanks for speaking this morning. Love to hear maybe a little bit of what you spoke on. I know you spoke on the capital and finance markets, but sharing a little bit of the challenges and or opportunities that you're seeing out there.
Yeah, I think at this point in time in the market, really, there's no shortage of challenges, but at the same time, there's no shortage in opportunities. And so it's just really being disciplined and diligent in how people are looking for deals and how they're capitalizing them. You know, on the debt side, what's been really tough is that deals aren't penciling out. You know, the good old higher for longer isn't necessarily helping with that. I think a lot of people in the market were really hoping for some tailwinds with lower rates coming, and that's just going to be a little bit deferred. And so that's created a little bit of stress at times and angst throughout the market. But again, at the same time, that creates a lot of opportunities, especially for those that are continuing to stay in the game and looking to buy. You know, there's a lot that you can do to make sure that you're situated well from a financing perspective. But at the end of the day, you just need a good sponsor with a good asset, with all the basic fundamentals of all the demands and locations and things of that sort. And you just have to have a good business plan. And today's business plans, you know, you don't want to be too lofty. You need to be conservative. You need to be diligent. You need to watch how much you're expecting income to increase and make that sort of flat line with your expense increases as well. And try not to play a cap rate game. And, you know, yes, we all hope that rates will come down. I'm confident they will. I don't know when. I wish my crystal ball worked. But at the end of the day, if you're running a business plan with today's environment in mind, you should set yourself up for success. And hopefully there's tailwinds, but don't bank on it. You know, take what you got now and look for the opportunities. You may need a little bit more equity to bring into your deals. If you have it, hopefully that gives you even more opportunities. It'll set you apart from the pack.
Great. And you all have been through cycles before, so it sounds like that's the key thing I'm hearing over and over is the people who've been through the cycles, finding a great partner. You know, there's a lot of things that may, like you said, pencil in, pencil out, but you got to make sure you got a great partner for the long term.
Yeah, I mean, they say in investing, past performance doesn't predict future performance, but at the end of the day, past performance shows proof of execution. Real estate is fluid, so it's always going to change. There's always going to be headwinds, tailwinds, and I just like to call it the whirlwinds. And so it's just using what's worked before and also adapting to the current time. So it's a mix of it all. But yes, I do think that those that have been through the cycles will be better off because we've just seen different struggles and opportunities and taking advantage of it.
And what about from a regional perspective? Obviously, we're here in the Southeast, out of Atlanta, but where are you seeing the biggest opportunities? Is it mainly in the South, like in Florida, Georgia, Carolinas, across the board?
Yeah, so we're a little biased because we're a Southeast-based lender located in Greenville, South Carolina. So a predominant amount of our portfolio, especially multifamily, is here. Okay. So yes, we see a ton of it, you know, Sunbelt as well. I think the challenge in the Southeast is that competition is there on all sides, whether it's the lending side or on the investor sponsor side. So it's a great markets. I think there's some that have become a little frothy. So you just got to be cognizant of that. But you can see that when you're looking at your deals on a pricing basis or on an income basis on a rental from a rental unit perspective, and just bake that into your model. I mean, if you're seeing rents are peaked out, then you shouldn't drive a bunch of rent assumptions of growth. You know, just keep it flatlined and see what you can drive in yield, and that will depict if it's an opportunity for you to strike on or not.
Awesome. Great nuggets there. Thanks for joining us here at IMN in Atlanta, and we're excited to see you again soon.
Absolutely.
Right? And see all the deals you're going to be doing. Cheers.